Gold, daily forecast, April 4th, FXEmpire.com. The gold markets fell fairly hard on Tuesday as the Federal Reserve released its minutes from last month's meeting. The minutes made no mention whatsoever of any signs of a pickup in easing, and in fact had a little bit of a shift to more of a wait-and-see attitude. It appears that the market had a bit more quantitative easing in mind as risk assets sold off and a lot of money flew back into the US dollar on the whole. The 1640 level that I've just highlighted is still support, and we did manage to stay above it at the end of the day, but it should be said that the close is very bearish, and it does appear that 1640 will be attacked again and again, and we'll see if we get a breakdown. We are still in the consolidative area of 1640 to 1700, and as such, if we were to play this, we would play it with that in mind. In order to get involved in this market, we can only do it from the long side because of the trend, and as such, if we saw ourselves bouncing around in here for a couple more sessions, then we would perhaps be convinced that this was just simply a knee-jerk reaction, as there are plenty of central banks around the world still easing. It should be noted that gold will behave differently depending on the currency you trade it in, but the largest markets are gold versus US dollar, so of course that is the general barometer of the strength of gold. Once we break down below 1640, 1600 will be a area where buyers will step in just based upon the large psychological round number. And then of course 15 is our floor in this market, and as long as we're above 15 we can only buy gold, and we just simply are going to wait to see if we can stay sideways for a couple days, or if we do fall, if we form some type of supportive candle at perhaps a handle or some other obvious spot such as a 50 number or something to that effect.